For more than 3 years, I've completely stopped looking at price action, and the reason is very simple. Behind the candles, there's nothing hidden, nothing but noise. You need to understand that Japanese candlesticks, the ones we all commonly trade and see on a chart, have been around for many decades, and they're just a visual convention. A convention I solved by bringing order flow and options flow into the way I trade. So in this video, I'll walk you through, step by step, why price action only creates noise and confusion on the chart, why you can't rely on price action alone, what order flow actually does and what it shows you, and how to also use gamma exposure levels to sharpen your edge on the chart. We'll cover the theory, and then we'll go through real chart examples too. The main problem: price action is the result, not the cause. Inside a single candle, we can see a few elements. A candle is made of an open price. In this case, at the bottom, because it's a bullish candle, a close price, and the high and low, the maximum and minimum excursion made by the wicks. That's it. Open, close, high, and low. But we have no idea what actually happened inside that time frame at the volume level. And here's already one of the core issues. What we deduce from price action is exactly that, a deduction. And that will be your ruin as a trader, because you'll end up working in an excessively discretionary way. If I've gotten to where I am today, nearly 7 years of experience in the markets, trading the financial markets every single day, it's for one reason only. I never handed my trading system over to discretion. And that is extremely important, because the moment you trade discretionarily, first of all, you're not trading, you're trying to interpret candles. So price going up or down becomes pure perception. You don't know the reason price should reach certain levels, why it's heading towards certain levels, whether there's actually a reason to see price rise or fall. And this is exactly what options flow helps us define. Things that are basically impossible and undefinable with price action alone. Discretion can't be measured. You can't codify a setup, you can't replicate it. So if you take a statistical sample of 100 trades based on discretion and you do a manual backtest, you're not actually backtesting. In a situation like the one I've put on the chart here, trader A, B, and C will all enter in different positions while thinking they're using the same logic. You'd never be able to understand the expectancy of your trades. And see, this is a very common problem, because today online we see the strategies of these ICT, smart money concept traders. But guys, what does smart money concept even mean? Smart money is only identified through the money it puts into the market. There are no smart money zones you can detect just by looking at candles. And whoever sells you that is selling you an approach where you can't calculate the basic parameters you need to build a strategy. You can't calculate expectancy, for example, and how much that single setup contributes to my trading system. And on top of that, you're not trading with a real reason why. You're trading on feeling. If you only look at candles, but even if you use classic technical analysis indicators, you're using tools that most likely are either lagging indicators or simply have no reason to exist. Because at a professional level, every trader has to have their own framework. Always remember one very important thing in trading. The one who wins is the one who has an operational framework and respects it. The hardest part in trading is execution. Waiting for your setup, and above all, executing it. If I have a strategy, I have to be the first one to respect it. And the main problem traders have is exactly this. They don't respect their own strategies. So I built myself a framework, identifying the daily bias through proprietary indicators I developed myself, plus other key levels. Then I have indicators that qualify the zones for me through mathematical calculations done on the bid and the ask. Not on feeling, not order blocks, not price action, supply and demand. Then confirmations, these two semi-automated, and then triggers. This is one of the hardest moments. The moment of execution. I'll show you on the chart, when we move to my order flow platform, what it means to have automatic or semi-automatic triggers. Execution is the hardest moment in trading, like we were saying. So I built myself a set of triggers that I've semi-automated with visible indicators that give me the entry signal into the market. And if you want to know what these indicators are, and above all, if you want to be guided by me on how to use them the right way, I recommend you check the first link in the description. Let's move on to other order flow tools. I use volume profile a lot, a tool that shows us where volume is being distributed across a given move. So here maybe we have a support level that we drew ourselves on the chart without actually looking at the volume behind it. But here we have the key levels where value is built during the day, because in the value area, where 70% of the traded volume sits, I've made another video where I talked about volume profile and went even deeper. We get an idea of where the market is really building its value. And then obviously value area high, VPOC, and value area low are excellent rejection levels. levels where the market can easily react. But beyond qualifying the zone, I love this tool because it lets me identify the bias. This is a model I've already shown you, and it's the best one I've found over the years studying volume profile, P shape, D shape, B shape. Based on how the profile shapes build, I get a clear bias. So if the profile builds a P, and obviously don't get stuck on the letter is a visual convention. Building a P, what does it mean in technical terms? In terms of convention, for us, a P is a market building value in a zone higher than the previous one. So the operators in the market are willing to pay higher prices and will probably be willing to pay even higher prices, just like in a D shape where operators all agree on this price zone. This is the true fair value, not the one invented by looking only at candles. And in a B shape, operators are willing to sell at lower prices. So for me, this tool is an excellent directional tool to find zones, to look for operational confirmations, both to trade reversals from the extreme areas, and above all, to know where to buy high and sell low for that session's trades, and for breakouts when I want a continuation. There, I'll obviously wait for price to come back into a price discovery phase to look for higher highs. This is how you trade in a non-discretionary way. Inside every price action concept we've seen, we have absolutely no idea what's happening inside. Another tool I always use is the footprint. The candle shows you a move up in this case, but inside it there are buyers and sellers. You have to picture that inside the candle because the footprint lets you see exactly the traces the operators leave inside the candle. What can we notice? That maybe in the final part, on the last ticks of the candle, buyers keep increasing, but price doesn't rise anymore. Always remember this fundamental principle. I learned it studying volume spread analysis. In trading, the candle always represents the result. Price always represents the result, while volume always represents the effort. So the effort they put in to push price up gets a result. No, because in our example, the candle stalled here at the opening level. And maybe these buyers are even up in the spike of the candle. If you looked only at this candle, you'd have not the slightest idea of what's happening. But by adding the footprints information, you can see that at this level, there are lots of aggressive buyers hitting the ask without managing to push price higher. So it means somebody up here is selling passively with sell limit orders. There's a market maker operator absorbing the buyer's momentum. See how drastically the market red changes with these tools? I use other confirmation levels, of course. Among these, there are delta aggressions. I use the big trades indicator, which shows me on the chart where the big operators actually step in and why it's important to visualize it. Together with the absorption concepts I just showed you. Completely different. So an operational framework I can recommend. Use volume profile to build a context, a bias, and use the footprint and big trades tools to watch absorptions and continuations, and then go and execute the trade. This is a very, very simple method. Now let's move to the bridge I built between order flow and options flow. Let me tell you right away. This is not a technical lesson on how options work. That would take hours to explain. I'll simply explain what I'll then show you on the chart. Why I added gamma, the gamma regimes, and how I built my operational checklist. By the way, if you comment checklist in the DMs, I'll send it over to you step by step, and then we'll go and see the whole thing on the platform. Now, I realize that order flow leaves a gap. It's not a matter of a flaw. It's a matter of market regime. Order flow struggles to show us the market regime the way options flow actually does. That's why I introduced reading the gamma exposure levels and above all the positivity or negativity of gamma. Here's a small overview of how it all works. Just know that the dealers on options use futures to hedge. So if I buy on one side, I sell on the other. And the gamma regime simply tells us that when we're in a positive regime, dealers hedge against the move. So if the market goes up, the dealers will sell. To explain it to you exactly as if I were explaining it to someone who knows nothing about trading. Obviously, I could go much deeper into the technical side, but I don't want to. I want you to get it very easily. So here we have compressed volatility, a market moving in a range-bound regime, up and down, so to speak. And at the key levels, price gets rejected. So we can use the key levels of the volume profile. With a positive gamma regime, I invite you to think about this. This alone is enough to solve 90% of traders' problems. If we're in a positive gamma regime, we can comfortably sell at the value area highs and buy at the value area lows. Will all the trades close in profit if we have the proper confirmations? Obviously not, but you have an edge. And above all, an edge that doesn't come from a feeling. It comes from what the market is actually intending to do. When instead we're in a negative gamma regime, in this case, the dealers will buy the move. So volatility is amplified, and the dealers will be more willing to buy the rallies and sell the sell-offs. Trend followers, essentially. The moment we reach key levels, the market is very volatile. So you can also aim for breakout trades. So how do you integrate a system like this? I'll leave a link in the description to discover it 100%. Personally, I use the regime of the day and the key options levels, which I'll now show you, with a simple setup from yesterday's session. I want profile and zones. So I go and take the demand and supply zones, but not invented ones, with an indicator I created myself that spots the main absorptions. And I obviously use the value area zones, both for bias and for breakouts, reversal zones. I use order flow for operational confirmations. The moment I'm there, I want absorptions, I want big trades, and so on. Then I wait for one of my triggers, when I actually go and press the button. If one of these 4 layers is missing, then there's no trade, or at least there's no quality setup. Now, a lot of people talk about A+ setups. Well, I'm not of that opinion, guys. For me, I either trade or I don't trade. There's no A+, B+. Why would I do something that makes me less money? I'd rather just not do it. So it's pointless to trade if it's not all there. Now let's move straight onto the platform so I can show you a bit of the operativity you can have with these tools. Let me set up the screen for a second. Perfect. Great. Let's start from the basics. I'll try to be very quick. Clean chart with the key levels. I use the Mentor Q platform, which integrated with my ATAS platform lets me have the key options levels automatically plotted on the chart. I won't explain them all to you, but the gamma level to see whether we're in a negative or positive gamma regime. This here is the HVL. And then here we have the HVL of the 0 DTE options. So if we're below this line, the market's in a negative gamma regime. And so it'll aim for expansions. If we're in a positive gamma regime, we can expect a mean reverting market. Let me show you one of my favorite setups. So I also show you how I use volume profile with everything combined together. First thing, I set up a volume profile on the start of the New York session. Obviously, you can do this automatically too, but I'll show you applied manually. So we take the start of the New York session and I take the first 15 minutes of the session. Like everyone who trades the opening range breakout. In this case, I've got nothing because the market is very compressed, as you can see. It's a D shape. So basically, I take the profile of the first 30 minutes of the session, which is exactly this. What do we see here? Big congestion, a breakout from price, an empty low volume node, a zone completely empty, drained of volume, because there was a vertical drop. If we then look at the footprint, we notice that the buyers were absorbed. The sellers, very aggressive. From here, I build my value area, delimited by these orange lines you see, VAH and VAL. What happens? Price closes the 30 minutes below the value area low, and we're in a negative gamma regime, because price is sitting below. We reach a key level, GEX 7 and 8. I'll explain later what they are. And another key level for scalping. So here, I expect a reaction. I don't position short right away. I go and identify this zone as a zone of potential reaction. So the whole low volume node and the value area low become my reaction zone. At this point, the job's done because now the levels have changed. But yesterday, there was a key level here, the put support, which has now shifted completely. Yesterday, though, we had the put support down here, put support down here. So this is one of my favorite setups. How do I enter this trade? At this moment, I go and activate my proprietary indicators, plus the big trades indicator to look for exactly a trigger. So the context is a short bias, and I also have an indicator that identifies the market bias, which I won't show you now, but I showed it in another video. So I start the day, the New York session, with a short bias. At the start of the session's move, sell-off, buyers absorbed up here. So right at the session start, buyers were absorbed. We were in a positive gamma regime, so price was in a mean reverting phase. It overshoots, a gamma flip. And so here, my zone is the low volume node, where there's little volume, plus the value area low. This is my whole macro zone that I take. We're in a negative gamma regime, so I follow exactly the checklist I showed you before. Options flow gives me the key levels, so I wait for a reaction at this level, but it gave me the gamma flip. I choose the zones and the bias with volume profile. And in this case, I use big trades and the footprint to go and see what happens at my key level. The buyers were completely annihilated. Look what a beautiful absorption. Here, the delta footprint shows us beyond the big trades, which are 99 in favor of the buyers. The delta footprint shows us exactly at the value area low of the previous profile, the one from the first 30 minutes of the session. A huge absorption. And so from here, I go and place my trade. I use this very candle as the trigger, with a stop loss above the spike of the candle, and I follow the trade all the way to the key level, which was exactly the support, right up here. And this key level, guys, this is a 1 to 10 risk reward. In very little time, because it's a trade that lasts a little over an hour and can obviously be managed dynamically. If you want to learn to use these tools too, if you want validated setups that let you enter the market with this kind of precision, you know what to do. Click the link in the description and I'll see you in the next video.